Good day traders and investors, welcome to the last technical update that we'll be publishing in 2023. In this update, I'm going to show you several high potential trading setups that can develop in the first week of 2024. Before we get started, I want to remind you to make sure that you subscribe so that you can receive notifications whenever we publish new updates with high potential trading opportunities. You can also find us on Instagram and TikTok. And finally, you can join our completely free Telegram channel in which we're sharing high potential trading setups and important market related information completely for free. You can find all of the links down in the description. So, without further ado, let's get started. Let's first discuss on what happened on the setups that we covered since last week. First, last week we mentioned the GBPAUD, which we also discussed a week before that. Couple of weeks ago when we first discussed it, the price was down over here, potentially forming this inverse head and shoulders, and last week it was already forming it. Since the breakout candle over here, the price has produced a reasonable $38.5 of an increase. The crude oil setup that we discussed last week was forming a potential head and shoulders chart pattern, but as you can notice over here, this pattern never gave an entry and the price just broke above the general downtrend resistance. This setup was invalidated. A similar situation on the USDJPY. Last week there was a potential double bottom forming. We can notice that over here the price couldn't break above it effectively, started consolidating to the side, which eventually invalidated the whole setup. Finally, the EUR/JPY was forming an inverse head and shoulders chart pattern. It produced its effective entry right over here, and from there the price went straight to the point, producing an increase of about 140 pips. This setup could have been used for a reasonable reward to risk ratio of between 2.5 and 3. Let's now go to the 4 new setups for this week. The first setup that we are going to discuss in this update is on a 1-hour chart for USDCHF. Over here you can notice that the price started forming a potential symmetrical triangle. The first very important thing that we need to take in consideration over here is actually on a bigger time frame chart. If we go to daily and we zoom the chart back in time, we can notice that the drop that the price encountered right over here is also an extremely strong support range, which was created from this major low point over here in 2015 and the sideways consolidation over here in 2011. The price currently is sitting at this extremely low level, and if you look at the RSI indicator on the daily chart, you can notice that currently it's extremely oversold. Last time it was so oversold on the daily chart for USDCHF was over here in July 2023. Back then the price produced a reverse to the upside and an increase from 0.8560 all the way up to 0.9243, a colossal rally. Going back to the 1-hour chart, there are a few things that you gotta take in consideration. The first thing is the sort of a breakout that you are looking for. By definition, the symmetrical triangle itself is considered to be a neutral pattern until it produces a breakout. Usually, it's considered that if the price breaks to the direction of the movement that led into the pattern, it has a higher chance for success. Here we have a downtrend movement leading into this pattern, so a breakout to the downside could have a higher chance for success on the basis of the symmetrical triangle alone. Here, however, we need to take into account that we have an extremely strong support range on a very long-term time scale, which means that in this specific opportunity, you might get higher chance for success if the pattern produces a breakout to the upside. Couple of additional things to monitor would be first the MACD indicator. You already have a bullish cross right over here, but currently what you want to monitor for is, in case the price goes up and breaks above the resistance, you want to monitor for the MACD lines crossing the zero line, giving bullish continuation. The other thing that you may want to look out for would be the 20 and the 50 period exponential moving average. On them, what you want to see is that if the price goes up and breaks above this resistance, you want to see both lines moving below the price and producing a bullish cross, which would be an extra confluence in this setup. The next setup that we're going to discuss is on a 1 hour chart for silver. First, if we look the price in this region over here, we can notice that it might be forming a potential inverse head and shoulders. So far we have the first shoulder, the head, and over here possibly the formation of the second shoulder. Now this pattern is in the center of our setup, and in order for it to be valid, what you need is the price to reverse, go up and close effectively above this resistance range over here, which acts as the neckline. There are a few additional confluences in this setup. First, if we zoom back, we can notice that over here the price encountered strong support in a support range that was created from those low points over here and those ones over here. Additionally, if you go ahead and you set up Fibonacci retracement levels on this last strong upswing, you can notice that the price dropped exactly to the 0-point Fibonacci retracement and started bouncing to the upside. A good thing about this inverse head and shoulders is that if it forms the last shoulder, it's also going to close above the 0.382 retracement level. Couple of extra confluences that you may want to observe in this setup. First one, you can look at the MACD indicator. You already have a bullish cross right over here where we got the formation of the head, but what you want to see is if the price goes up and closes above the neckline of this chart pattern, you want to observe possible continuation from the MACD by getting both lines above the zero line. Additionally, if you add the 20 and the 50 exponential moving averages, you want to see them going below the price and possibly producing a bullish cross. If all of this happens, you're going to get a 5 confluence analysis. For our setup, we're looking on a 4-hour time frame on pound Australian dollar. The first thing to consider is that over here the price is forming a potential double bottom chart pattern. The pattern is very obvious, and we are having a well-defined neckline over here, which can be indicated as a range like this. For this pattern to produce an entry, what you need is the price to go up and close effectively above it. There are a few additional confluences to take into account over here. If you zoom the chart out, you can notice that currently the price is hitting a strong support range, which was created from those low points over here and the ones over here. If we zoom out even further and we get the Fibonacci levels from this major low over here all the way up to this major high over here, stretched across this general uptrend, we can notice that the downtrend that followed after that took the price exactly to the 0.5 Fibonacci retracement level, and this is the exact point at which it's encountering this strong support. What you want to see, besides the breakout above the neckline, would be possible continuation from the MACD. You can notice that already over here we got a strong bullish cross, and if the price goes up, you want to see both those lines going above the zero line to give further bullish indication. Additionally, you can add the 20 and 50 exponential moving averages. You want to see both of them going below the price and producing a bullish cross. Finally, we're getting a very interesting setup on a 4-hour time frame for USTech. The first key element that we gotta take in consideration over here is that the price has been forming a rising wedge chart pattern. That pattern even produced what can be considered as an effective breakout a bit before market close last week. But in a bit we're going to get back to that. Let's now observe the other confluences. A very important thing to mention is that on this point over here, on the 28th of December, USTech reached an all-time high. This means that it's not possible to see any horizontal resistance levels from this point onward simply because the price has never been so high. If, however, we go on a daily chart and we zoom back, you can notice that if we connect those two major high points, the one over here back in August 2022 and the one from over here, July 2023, you can notice that we're getting a general uptrend resistance. And right over here at this new all-time high, the price encountered this level and produced very strong rejection from it. This is a very important extra confluence, and it's also the only form of a resistance that we can take in consideration. Another very important thing to observe over here on the daily chart is that if we bring up the RSI, we can notice that we had a very obvious bearish divergence. Over here, if we connect this high point in the price and this one with a line like this, you can see that this line is obviously ascending. Let's make it thicker so that you can see it better. If we connect the equivalent high points in the RSI, however, we can notice that obviously the line is descending. This is giving an extremely strong bearish divergence. Now, for a moment, going back to the 4-hour chart, you can notice that this divergence is also present over here as well. The difference is that here we're having 3 high points which are descending compared to the daily chart. You can see them like this. Even though they don't go in a perfect line, you can see that over here, and over here, we're getting ascending high points, while in the RSI, over here, and over here, we're getting descending high points. Very strong divergence. What makes this even better is that you're having a divergence on the MACD as well. Those equivalent high points in the MACD are also descending, as you can notice, which is also giving a bearish divergence on it as well. So far, if we take into account the 4-hour chart and the daily chart, this setup already has 5 confluences plus a breakout. Even though it looks so good, we need to take into account the fact that again the price is on an all-time high and we don't have a strong horizontal resistance. This is making this setup both a bit riskier than usual, but also highly potential. If you want to be more aggressive, then you can consider this as a valid entry. If you want to be a bit more certain, you may want to see how the market is going to react on the opening, and there you're going to be looking for several possible things. One of the possible developments is for the price to go up, produce a retest of this line, and then start dropping down again. This is going to give more certainty, but it's also not absolutely certain that it's going to happen. Additional things that you can observe in case the price continues dropping is if the MACD lines are going to drop below the 0 line, which is going to provide bearish continuation. And also you can add the 20 and the 50 exponential moving averages, that's on the 4-hour time frame. And what you want to see, both of them going above the line, and what you want to see is both of them going above the price and producing a bearish cross. You can notice that the 20 is already above the price. If the price continues dropping down from here, it might take just a few candles before you get the bearish crossing in them. I hope that you've enjoyed our new update, and I hope that it gives you a lot of success in the first week of 2024. I want to wish all of you a lot of success in the following week, health above everything else, as is the most important thing in life. Also happiness, joy, relaxation and prosperity for you and your families. I wish you a lot of success on the financial markets in the following year, 2024. Expectations are for it to be highly volatile and produce a lot of great opportunities. On that note, if you would like to receive additional help in the form of learning about high potential trading setups, make sure that you subscribe for our channel so that you can see whenever we publish those updates and also other important educational content for traders and investors. Again, I'm reminding you, you can also follow us on Instagram and TikTok, and you can join our completely free Telegram channel in which we are publishing high potential trading setups and important market related information. All of the links you can find down in the description. That's it for today. I'm going to see you next year. All the best of luck.